From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. This is the COB, all the stuff you need to know about the day in business and markets. I'm Nadine Blaney.
And I'm Kyle Rodder, and an unexpectedly positive day today.
Do you know that this is the sixth straight session, that's a lot of S's, sixth straight session of gains for the local market. So yeah, looking pretty good. I was a little bit surprised. I thought it might be a little bit lackluster out there, considering we've got the US on holidays. And even if you look around the region, we saw the Nikkei in Japan down by 1%.
Okay, so yeah, we're a little bit of an outlier. It's interesting too. We saw some weakness coming through the materials and energy names. I know we'll go through that a little bit in a second, but generally speaking, fairly broad base. The ASX 200, for what it's worth, up 0.53%. The CBO 200 up 0.44%. And well, like you said, weekly from Wall Street, bit of a public holiday in the United States tonight, but nevertheless, optimism abounds.
Yeah, well, let's consider why. Perhaps we'll get to that in our three themes. We continue to keep a very close eye on tech. I mean, even though we did see tech down in the US on Friday, I mean, the NASDAQ dominated the week, the 8th straight week of gains for the NASDAQ, and tech here getting a bid as well. Also, you know, just behind that rally, I think here, at least, if you look at, you know, the Aussie dollar, for example, is very much the hopes for China, like further stimulus coming in China as soon as tomorrow.
Well, yeah, that's the hope, isn't it? And perhaps what will be the story for the next couple of days, that 1-year loan prime rate, more significantly perhaps that 5-year loan prime rate, to be cut by 10 basis points. That's the word on the street. And well, that's important because that 5-year loan prime rate is, well, I suppose you could say the area or the rate that they use to try and stimulate the property market. And that's been, well, a big problem for the last 18 months, maybe 2 years now. It's been a long time.
Interesting though, because, you know, a lot of the conversations that I've had has been in terms of, you know, what would be really great for Aussie miners, for example, is some sort of a big stimulus spend coming from the Chinese authorities. And it doesn't look as if that is going to be the way in which they look to stimulate the economy. I mean, you never know, but it seems as if it will be a bit more nuanced than that. I was chatting with Nathan Samasundaram from Deep Data Analytics on the call today, and he was just saying, like, China's reopening has been looked upon as a disappointment from those outside looking in, but China's doing the right thing in his view, you know, looking to go for, you know, steady growth rather than, you know, just spending big to achieve these big meaty targets. But despite that, we did see iron ore today dragged down by falling steel prices. Yeah,
and we did see some of those cyclical areas a little weak. I know coal as well was down for its own reasons. New Haven was off, and so was Whitehaven. So materials and energy were the only sectors lower. But again, nevertheless, we did probably run up into that news at the end of last week anyway. So again, we'll continue to wait and watch for some of that. Well, breaking news tomorrow, but well, let's get across some of the sectors because healthcare was the top performer for the day. I guess maybe CSL catching a bit of love, bouncing back a little bit.
Maybe a bit of bargain hunting moving in. Still, you know, not making up all of last week's losses. Sitting at 284 to finish this session, and you can see there the rest of the healthcare names. In fact, I just noticed on the front page of the Fin, Macquarie's named 7 stocks that it sees as being very resilient in the face of a downturn. And I know that CSL was on there, and I think ResMed was on there. Didn't have time to read the article in its entirety, but I'm sure we can find that stuff out ourselves as well.
Dig that out, yes, indeed. And well, consumer staples also rising 1.5% collectively today, and Woolworths actually being upgraded by a few brokers.
Yeah, that's what really did help drive that. It was a UBS upgrade to buy, up by a pretty solid 2%, and you can see Endeavour Group there up by 1.3%. But even the consumer discretionary retailers had a pretty good day today, all things considered. So if you look at, you know, JB Hi-Fi, Harvey Norman, Premier Investments, okay, they underperform the broader market, but it has been such an unloved sector, and sector-wide, it was in positive territory.
Yes, indeed. Of course, concerned about interest rate hikes there and the impact on Aussie households. We did talk about energy before. We'll touch on that very quickly. Woodside down. Whitehaven Coal, you can see down there 3%. New Hope was about 6% as well. So it was very much those coal names that bore the brunt. But generally speaking, just some weakness coming back through some of those energy players. And maybe we'll skip to the miners as well, because it was perhaps a little bit more nuanced, but only because gold was up by a fraction. Newcrest mining up 1.5%. The big three there also down by, well, a non-trivial amount.
Yeah, and it's so interesting because, you know, while we've got all this talk of stimulus, we've had the likes of Goldman's downgrading GDP expectations for growth this year from 6% to 5.4%. So, it's just a waning momentum in the Chinese economy despite this COVID reopening. Look, I don't know, Kyle, it's been quite quiet on the corporate front lately. I know on Friday we had AGL, but it just feels as if we're sort of waiting maybe for the next spate of downgrades to come before we get to earnings season.
Well, I was going to say the calm before the storm, right? We're not that far away from it now, but no, we certainly have been a little bit quieter on the news front. Wouldn't mind picking up on Lake Resources actually, just in terms of the corporate news of the day, because I think that was down by about as much as 19% by the middle of the day's trade. Some disappointing numbers coming out, or about, I should say, specifically an Argentinian mine.
Yeah, they put out production timeline, which obviously is very much disappointed the market. Abacus Property was actually the best performer on the 200 today, though. It's looking to spin out the Storage King part of the business. So I had a chat with Harry Watt from Shaw Partners and Market Matters today, and he reckons it makes good sense. That interview is up online. He also chatted to me about Pointsbet. So it has had DraftKings make an offer for the company, so it wants to sell its US business, and it came to market and said, look, it appears as if there could be, a better or an improved kind of offer coming through. So that's really, and again, Harry Watt said this is going to be really good for shareholders, a bit of a get out of jail free card, so to speak, for some. But yeah, the share price up by close to 21% today.
Indeed, very tasty. And Austral and Korean Energy also on there as well. What was the news behind that?
Austral got a deal with the US Navy. I'm surprised that its share price isn't, well, not surprised really, but it's down by 2% even in the wake of that news. And Korean Energy firmed up its production guidance. It also deferred planned maintenance for its project in Brazil. So looking pretty good, up there by 3.25%.
Indeed. And well, we didn't have a stock of the day actually, did we?
Yeah.
You took the reins and we went a whole sector.
Well, because first of all, it's just such a massive influence right now in the market. We had a little bit of news. Hansen Technologies and Bravura both got a new CEO, but really it's just like this is the overarching theme, and everybody wants to know: have you missed the boat with some of those big names here in Australia, or are some of those really beaten down tech names still looking like good value? So Gaurav Sodhi and Nathan Somasundram, here's what they had to say.
We've got an amazing tech sector on the ASX. The top 4 or 5 companies are genuinely first rate. Stuff like WiseTech, Technology One, Xero, Altium. We've managed to pick up Objective Corp during this little route. We started a little position in Objective Corp. I think that's an outstanding position. I would buy that over Technology One. I know Technology One is a wonderful business and it's on our watch list as well, but I would just suggest that there's a lot of aggressive accounting that runs through Technology One, and it's much cleaner and from my point of view, much more favourable through Objective Corp. And so I like that business quite a lot. We know we're long-term fans of Altium and Audinate. We hold both in the portfolios. Audinate is a top 5 position for me personally. I've held it for years. But I think my favourite tech stock at the moment, the one that I have been buying recently, has been RPM Global.
That are quite interesting.
Yep.
So I am looking at the sector. Tech sector is of interest for me, but I'm not chasing the fan favourites because they're all quite well priced. And I think they'll trade with NASDAQ, and that's another game being played on a global level. So I think they'll come off, but look, they're good, so you don't have to worry about them. But there are some turnaround stories like RPM Global, like Objective. I think they're worthwhile on the risk return to support in this market. And I think if things do, if you're positive on the market and you think things are going to keep running, your upside is much more on something like RPM Global and Objective than with the fan favorites, because everyone's there.
Well, that sounded reasonably positive overall. Obviously, it's nuanced when you come to a whole sector, but there was a lot of opportunities out there.
Yeah, absolutely. It was a good chat. It was actually a really good episode of The Call. It always is. But those guys just, they've got a vibe going.
Oh, they've been doing it for a while.
Quite a bit.
Yeah, they know what they're doing.
You know who else knows what he's doing? Josh Gilbert from eToro, and he is joining us now. Josh, hey, good afternoon to you. Your shirt does not correspond with the performance of this market today.
Yeah, this color behind me does a little bit though, but no, I didn't come prepared. But look, no, it's nice. I'm quite happy to wear the opposite, and we see green from the market. Coming off the back of obviously a 3-week losing streak, to break that last week was pretty good, and then get a nice follow on today, especially after we had a bit of a negative lead from Wall Street on Friday. We sort of shrugged that off today, which was quite good. But look, I think the weakness that we've seen from the local market has priced in much of the hawkishness that we're getting from the RBA. Ultimately the market is saying, okay, cool, we've got 1 or 2 more hikes left in the tank. And I think the good news with that is that if we don't get that, then we could see some upside here. And the good news to that as well is that, yes, okay, markets, the local market is probably underperforming global markets as a whole, but it's still relatively resilient. We're still up year to date. We're still coming off the back of, a resilient year last year as well. I mean, even look at the UK, for example, really struggling with inflation, really high interest rates, not having a good time at all on the macro front. If you take away that it's the UK, you could probably look at it as an emerging market. But again, equity market's still relatively resilient. So yeah, I think we've got to take the good news when you can sometimes. So yeah, a fair bit of positivity going into today.
Indeed, and I suppose if we are looking for the next bit of good news, it might come from China. Perhaps some hopes there of stimulus from the PBoC in the next few days.
Yeah, we've obviously got plenty of good news last week in the sense of those cuts to the short-term and medium-term rates. I think that was the sort of the start of those, the monetary tweakings that we were seeing. It was a token, I guess the market saw it as. The market sort of ran with that a little bit. We had plenty of optimism there from China tech. We had some optimism from the local market in terms of materials as well. But I think that we've lost a little bit of that steam today, given that we're still waiting on that sort of clearer support. We had the state council meeting, which didn't sort of reveal any potential stimulus. And I think the market didn't like that as much. The Hang Seng, I think, was down about 1% today. But I think we've got to have a little bit of patience here. I think, China is doing the right thing. They've ultimately put themselves in this problem. But, they don't want to sort of, cut rates and sort of overstimulate and then have the problems that the rest of the world have, and then have to then start fighting inflation and raising interest rates again. So look, a bit of patience, I think, needed from investors. This isn't going to happen overnight. It's going to take a little bit of time. But I think those cuts will come. We've still got the ability to see more cuts this week. That may happen after the sort of the weak data that we had from China last week, from industrial and retail sales as well. But yeah, we've just lost a little bit of steam there. Investors just sort of pulling back a bit of optimism, given that we didn't have any mention of a stimmy package in the council meeting today.
Josh, we did see tech coming off on Wall Street on Friday. Was that just a reaction to, the sheer strength that we had seen, Microsoft's market cap? I can't even remember when it hit Apple all-time highs, Oracle rising significantly after, an improved forecast, NVIDIA. Like, was it just a time for a bit of a pullback?
Yeah, look, I think we can ultimately say if a breather comes, no one's going to sort of bat an eyelid at it, to be honest. I think, again, the NASDAQ was down, as you say, Friday, but I'm not sure, any investors are sort of going to sort of worry about that too much for the time being. So look, we're in a sort of, a really difficult position, I think, for investors where, okay, have we reached the top for the NASDAQ? Are we going to see it sort of come off significantly? Are we going to see a bit of a breather? Or are we just going to see this thing continue to sort of run forward? I think the good news is that markets is, especially, tech is pricing in, at least another hike from the Fed. And the market is ultimately calling the Fed's bluff because, Jerome Powell is saying, okay, we're going to have 2 more hikes. The dot plot has got 2 more hikes in there as well. But, markets just don't believe that. So, look, I don't mind seeing a little bit of a breather. Just a bit of a slowdown is good, always good to see, I think. You don't want this thing to sort of keep running high, and then we come crashing back down as well. The contrarian investors are certainly going to be looking at this with everyone sort of piling in as a bit of an opportunity to the downside. But I think tech is still a nice place to be, in this current economic environment. If we do get a bit of a slowdown, in terms of economic growth, a bit harder than we're expecting. I think tech will be, fairly immune to that. And then I think if we continue to sort of see this positivity that we're getting from the US in terms of, okay, the economic data that's coming through is showing signs of a resilient economy. Inflation is moving in the right direction. There's no question about that. We're already at sort of 4% for headline inflation. So I think tech is a good place to be. And I think investors are understanding that and ultimately don't not want to be in tech right now because, the biggest thing the biggest mistake I think you can probably make in markets is not being in them. And we saw that, I think, more evidently this year than we ever have done before. So, I think that's a big part of what we're seeing is just investors wanting to stay involved in markets rather than sort of jumping out at the first sign of trouble.
It does seem sentiment is shifting just a little bit. Josh, thank you so much for helping us kick off the week. Josh Gilbert there from eToro.
See you, Josh.
Thanks, guys. Take care. Have a good week.
You too. Well, I think we're at that time of day. Why don't we take a look at what led the market? We'll start with what led the market because it was a positive session. And Abacus, already sort of referenced the spin-off that's taking place with Storage King Megaport. I had sort of not been paying attention to Megaport. Is that just a tech story, do you think, Carl?
I see it on there, and I often, as you know, when you do it as well, try and write that market wrap at the end of the day, and often Megaport can be doing things that are basically indescribable, inexplicable. So it might be that I haven't been able to see anything in particular when it comes to Megaport. But we have seen some strength coming through tech more broadly.
Yeah,
so.
There's no news that I can see, nor for Polynovo, but it did again get name dropped in the call today. If you'd like to go back and take a listen with the guys, and Domino's Pizza. I mean, this time last week, it was out with that downgrade. So again, just perhaps a little bit of bargain hunters moving in, and like 360, I just think it's the tech story. Overall, let's see if there's more news that we can hang our hats on. Oh, there you go. There's your Lake Resources.
Yes, down 20% for the day. We spoke about the disappointing production update perhaps a little earlier. A New Hope, we're talking about the weakness in coal. Well, there you go. New Hope was down 6.5%. And again, interestingly enough, it was those sort of materials and energies names, despite some of the speculation around Chinese stimulus that will weigh on the market.
Late in the session, Iluka Resources, I did note, had a downgrade coming through. And again, I do think that was coming from UBS. Don't quote me on it, but it was a downgrade. I do know that. Sometimes, we're consuming so much information during the day. I really do my best. Small caps, let's see if there's anything I can pick out of here.
Yes,
Oneview Healthcare signed a deal with Telstra. Check. Pointsbet, we already talked about that one. And
2 out of 3,
the rest of them I'll leave. Let's see what's laggards on the small to mid cap space. Jervois Global, you weren't there on Friday.
I know I wasn't. And have they called us back yet?
No, I don't think so.
We'll have to double check.
Give us a call.
Jervois.
We need to know how to pronounce your name. If for nothing else, save us from ourselves.
Yeah.
But giving back some.
If they call back, I'll buy $500 of the stock. How's that sound?
All right. Oh my gosh. Somebody has written that down and taken notes, Kyle. You might be rich. You never know.
Maybe one day.
Overnight, it's pretty quiet. We've got that Juneteenth holiday in the United States, but I do believe that the NAHB is still releasing their housing market index.
That will be fascinating, of course. The US housing market having its own issues as well, similar to, I suppose, Australia's over the last 18 months or so with the tightening cycle. Do we have much on tomorrow? I think it's RBA minutes.
RBA, yeah.
Corporate-wise, it's a bit there, Santa Barbara AGM, is that right?
Yep, that's what I read anyways, and everybody always wants to get a look into copper, so interesting to note there. And we've got US housing starts tomorrow night, so it really is sort of a slow burn to start the week, I think it's fair to say, but we are making our way toward... Well, Jay Powell will be speaking this week. We've got the Bank of England this
SNB
week.
as well, if you're a currency person, Swiss National Bank.
And tomorrow we've got the PBoC. So that is potentially, what could really be dictating trade here tomorrow. Because of course we're all hanging out for these expectations of stimulus, stimulus hopes. I hope we're not going to be saying this time tomorrow, hope springs eternal.
Oh, we could do. At least it writes a headline for us.
Yeah. But we've also got Blinken wrapping up talks in China, maybe even meeting the Chinese president before leaving tomorrow. That's all I can really see today. It was a pretty good Monday.
Yeah, ease into it. That's what it's all about. You don't want to, I don't know,
stretch ourselves too much.
Stretch ourselves, to tear the proverbial calf on day one. We just, exactly, warm up, and that was a good start. I think 0.6% higher for the ASX 200 in the end.
Finishing off I should say, up to 7,295 for the S&P ASX 200. Look, so that's building on last week's gains, which ended up being awfully close to 1.8%. Very interesting times when you consider where interest rates are sitting, but it's just, these expectations that we're near the peak. I mean, I guess Jay Powell will go a long way to sort of clarifying that when he speaks this week.
He will. Well, that's what we have ahead of us. We'll maybe wrap things up for now.
Sure.
What do you reckon?
Yeah.
Remember, you can catch up on all the very high quality interviews that we did today. And all the
You
news,
did a
of course,
great one with the former deputy governor of the Bank of Japan.
I did enjoy that. It was a bit of a coup, I think.
Yeah.
So watch that. It is on the website, talking about effectively the changes to Bank of Japan policy, or I suppose maybe lack thereof, possibly going forward, and then also some interesting conversations about the long-term outlook for Japan's economy. It will be very, very influential. So catch up on that. Also, a myriad of other fantastic news, views, interviews that you can see. Otherwise, what do you reckon?
Yeah, have a great night.